So I'm hanging out with Sarah Trudell and Claire Walker today, and we're just going to do something that we thought might be kind of fun. So I've actually asked our marketing team to put together some questions. They're homeowners, they're first-time home buyers, and I was like, I'd like you guys to just put together some questions and just have us answer them as we open the envelope. So all these questions, we have no idea what we're going to open or what we're going to see, and we're just going to wing it and kind of going to talk through it with each other as far as each question goes. So these are the envelopes here, and let's just get rolling.
It says fixed versus variable. What are clients actually choosing and why? When
Don
a client
Freeman.
asks me this, exactly, that's my answer every time. It's call Don.
Yeah,
Because
just
as
call Don.
realtors, of course, we know things about mortgages. We understand what's happening, but it's so unique. It's person to person. Mortgages are different.
Yeah.
So fixed or variable is going to depend on the person. So I just send them directly to Don, and then they go through that.
You got to
So
go
ahead,
with
Don.
your pros.
What are people choosing?
Well, you know what? So this is actually a really good question, and I, of course, have this conversation all the time. I've got pretty much the dialogue that I've kept the same for a lot of years. Actually, pretty much since I first started doing mortgages. And the conversation is always, what are you the most comfortable with? You know what I mean? What, if you don't do something that's going to keep you up at night, don't do something if you're going to watch the news, you're going to freak out every time they say something and wonder if you've done the right thing. And I say, if you're going to take a 3-year, you might have plans in 3 years to do something. You might think that, hey, maybe rates will be lower in 3 years. And I always say to everybody, your guess is as good as mine. Like, nobody knows that.
No crystal ball.
There's no crystal ball. And then, so 3 years kind of like, yeah, I'm going to take, I'm putting my hat in the ring and I'm hoping in 3 years rates are lower. So if that's the way you think, there you go. Or again, if you have something planned for 3 years down the road. The 5-year, I say 5-year, you're putting your seatbelt on and you're driving out into the sunset, and you're not going to think about it for the next 5 years because you don't have to. Variable rate is you're going to get on the horse and you're going to see where it takes you. If you're okay with the unknown and you're like, yep, don't care, I'm going to take the chance, then variable could be a good product for you.
I've got a question for you.
Yeah.
So if you could maybe answer this, the last year of you being a mortgage broker, what is the percentage of your clients that have chosen fixed or variable? What's the most common thing that people think?
Honestly, I would say...
Or it's like half and half.
Oh, no. I would say 95+% of our clients choose fixed.
I would say, is it because they're scared of when interest rates started dramatically increasing? Is that why?
It's a mix. And actually, to be honest with you, most people I find, when you lay it out and you say, and again, I'm a huge believer in this is a comfort zone thing. There's no right or wrong answer.
Yeah.
There's a lot of different opinions out there. There's a lot of very pro variable rate opinions and that kind of thing. With a variable rate, you only ever have a 3-month interest penalty. But again, with variable rate also you have that it's variable. Like
You never know what your mortgage payment could be.
That's
It
right.
can always change.
Okay, have you ever had to talk someone out of buying?
It's a good question.
Yes. So there's a lot of times, and I wouldn't say talk them out of it necessarily, but help people understand the ramifications of what it is they're doing and what it could lead to. So there are some times where, a good example might be, I want to buy a house and my parents are going to be co-signers. And it's like, that's awesome. Are mom and dad going to help you with your payments? And I'll talk to mom and dad about it. You guys helping with the payments? Oh, hell no, we're not. Okay, your kid's on a fixed income, hourly, guaranteed hours, blah, 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 not any overtime or anything like that. There's just their income is what their income is. They can't really afford this. Are you sure this is the right decision for them? And a lot of times after looking through it, and I'll encourage people too, I'll say, do a budget. Like, maybe there's something that we can't put on the table. That's a different story.
Yeah.
So if they've got a business on the side that makes them money, if there's other sources of income that we just can't use, okay, cool, that's awesome. But when you're like, nope, this is my square box and that is it, then you might want to be careful about co-signers and things like that, because it comes down to, are you doing something that you can actually afford? So that would be that.
We had one of these together where I sent you a referral of a buyer. Do Do you remember this one? She was an older lady, and she was renting a place where she was super happy, but she'd come into some money.
Yes.
So she thought she should use that
Yes.
to buy a place.
Yes.
And it wasn't that either of us talked her out of it, but you gave her the guidance she needed to understand she was in a place that was super affordable where she was happy, and the amount of money of whatever she could buy wasn't going to do that for her. So she ended up keeping that lump sum. It was because she was older,
That's
and
right,
you knew
yeah.
that lump sum would keep her comfortable for the rest of her life, instead of putting it into a home where she'd have to move, be away from her friends and her neighbors and people that she liked, just to have this idea of owning a house where, like, obviously we wanted that for her if that's what she wanted.
That's an awesome example.
But when Dawn went through everything with her and explained what she could get versus where she was comfortably already, it just wasn't the right decision for her. So that was something that, like, we, you know, it
That's
happens.
true.
Yeah.
And it's a part of our business. And just because we didn't get that deal doesn't mean we don't get referrals from it or that we don't feel good that we made sure she was in the right place.
Sometimes buying a house is not always the answer.
That's right.
In everyone's situation.
Absolutely.
Right?
To me personally, I feel amazing when I do that. It's not about just the mortgage, it's about the client going, nobody would have taken the time to explain that to me. And you helped her understand that, I helped her understand that. And at the end of the day, she's living comfortably with a good bank account that she doesn't have to worry about. Not much she has to worry about.
It makes us so much more happy. It makes us happier to have a client that is leaving happy.
That's right.
Rather than whatever we get out of it at the end. Like, it's a feel-good thing.
Yeah,
so
absolutely.
Customer comes first. You know, sometimes it just doesn't work out for them, and that's okay.
Advice to a broke 20-year-old who wants to buy one day.
Interestingly enough, I did just go through this with my stepson, who is 20 years old. He came and did a financial sit down with my husband and I, and we kind of sat with him, and he said, I want to buy an apartment at some point. So we talked it through, and basically the advice that we gave him as a 20-year-old, and he has no money, is to just start saving.
Yeah.
Start saving everything. So we set him up with a first-time home savings account,
That's
a
awesome.
TFSA,
Yep.
and we planned $100 to go in each account on every payday. Now, obviously, in today's day and age, things are really expensive, and he does have to pay rent, you know, and his car payment and insurance. So there's not a lot
hard
left
to
over.
save, yeah.
But we really kind of spoke to him and said, if you really hunker down, really save your money, don't make any huge purchases for at least a little while.
Yeah.
Get that chunk, because once you've saved a certain amount of money and you see that number grow,
Yeah.
all of a sudden it's a game. You want to increase that number as much as you can. I've got $2,000 in there. Oh my gosh, that only took me 8 months. Okay, I'm gonna get another $3,000. Next thing you know, you got 10.
That's right.
Yeah.
So the first thing I say when I'm talking to younger people is credit. And you nailed it. You so nailed it. Just because you can, do not, for the love of God, do not go and buy your $100,000 freaking vehicle and then come back and go, but I'm trying to build credit.
Right.
Like, that is the most
Don't get a Visa and
ridiculous
fill it
thing.
up with video games or
my
whatever
God.
20-year-olds buy these days.
I always say to everybody, talking about credit cards, and they're going, you know, there's a lot of things to know. Credit utilization's a big one. Keep a balance, but pay it off every month of about 25%.
Yeah.
That, again, I won't get into all the intricacies there, but it's not that complicated. Just keep a low balance on your credit card as you're going forward. Pay it off every month so you're not paying interest, but use your credit card.
And we have to teach our kids this.
Oh, yeah,
You know, we have,
100%,
it kind of comes from the parents.
I did
in the
not
house.
know this.
I
did
didn't
not
either.
know
We
this.
didn't
Same.
talk a lot about this when we were growing up.
Dawn's
But now-
still teaching me.
Yeah, me too. So now we have the opportunity to teach our kids and our friends' kids and things like that
Oh, yeah.
on how to get started early. So now we have this opportunity.
Yeah.
And make sure that when you're saving and you come to that point that you can buy a house,
Yeah.
your first house funds your dream house. That's very
I was
important.
just gonna say the other thing we have to remind them when they're 20 is
Yes.
you're not going out and buying, you know, $1 million house.
That's right.
You have to be realistic
Yep.
with your expectations that, you know, if you're 20 years old and you can buy yourself a 1-bedroom apartment, like
That's what you do.
Huge.
Huge.
That's huge
Yeah.
to set yourself up for the townhouse in 5
Yeah.
years or to go to the detached after that. I just think
that's
you have to start
such a good-
somewhere.
yeah.
And I was just
Absolutely.
gonna say that's such a
Get
huge
the
thing for
crappiest
kids.
apartment
'Cause
you can get.
If they live
the
at
cheapest
home,
you can get.
if they live at home, they're used to those comforts. They think, you know, that they need to start there, but you just start somewhere.
Gotta
You
start
buy what
somewhere.
you can afford. What almost killed a deal of yours? I know we've all
Interesting.
had many. Go to the boneyard.
I have ones that say, what killed a deal of yours? I've had deals die,
Yeah.
but yeah.
So I had one recently, and it was actually a neighbor. if you can
A
believe
neighbor
it.
of yours?
No, a neighbor that killed the deal.
Oh,
Actually.
Oh my gosh,
Yeah.
interesting.
A neighbor that killed the deal. And it
Really?
wasn't because there was anything wrong with the house or anything like that. It was just the neighbor would not stay out of anything. They showed up for the inspection. They just came onto the property, and it just like ended up that at
Like
the
nosy
end-
neighbors?
Yeah, it was just a very intense neighbor. Who
Really?
actually just
So the buyer said, I don't want to buy this house. I don't want to have to deal with this neighbor.
pretty much.
You know, that's a very valid reason, actually.
I know at the end of the day,
Very
you're like,
valid.
I'm gonna have to live here next to this
Yeah.
person, and we did everything we could to try to keep them out of the transaction, but
Yeah.
they just kept involving themselves in it.
Wow.
And yeah, neighbor, that was
Wow. That is
so nothing we could do about that. Right at the end of the day,
Yeah.
that's where they live.
That
And
is-
I feel bad saying that 'cause it's not like we had subject to good neighbor. But, he was there for everything.
Yeah.
And we're trying to do the inspection.
Wow.
His head's underneath the house. And we're like, dude,
What?
he
Really?
was parking in the driveway, letting us know that his wife's business is next door. And by the way, we use the driveway to park. So we'll be doing that. going
Oh, okay.
forward.
I don't
Really?
think
That's
so, buddy.
why. It was like,
Oh,
Oh
no.
my
Oh,
God.
no. Forget that.
I know. I know. That one sucked.
What do HGTV and TikTok get completely wrong? We'll also add Netflix shows.
I'm going to out myself. I don't have TikTok. So I have no idea what's going on over there. You let me know, Claire.
I don't want to say how much I'm on TikTok. I do enjoy a couple minutes here and there. I like the educational stuff.
Yep.
Things like that. But
What are they getting wrong over there?
what
Tell
I
us.
do, what I am a little bit of a sucker for is the shows on Netflix, like
Yep.
Selling Sunset
Yep, same.
and all of those. And I tell you, it is nothing like that.
No. I wish.
I wish
wish.
too. I certainly don't show up in high heels. I mean, some realtors do, but I mean, not
How
me.
do you hop a fence in high heels? How
I
do you
know.
get a lockbox
How-
that's
yes.
in a garden in high heels?
How do you get into the crawl space? in high heels?
Exactly.
So really, what they portray on TV, like those kind of reality shows, is not how it is. It's much more glamorous online, a lot more drama.
Yeah.
We live in a world of a little bit less drama.
Yeah.
We all kind of get along, and there's no real huge problems like it says on TV. or
Yeah,
TikTok.
I agree.
And HGTV, I guess that would be more like repairs.
The home and
and-
garden, the renovations.
Yeah, the
things like
renovations,
that.
things like that.
I think how quickly they turn it over.
That's another
People
one.
expect they're going to
Yeah.
do their whole house in a weekend because HGTV showed them they could.
Yes.
And you're like, no, sometimes that's months, whether it's permits, whether it's getting the contractors in.
Yeah.
Some of the people around here, they're busy because they're good.
Yeah.
Right? So you
That's
can't
right.
expect to have everybody in on one weekend. So I think
Yeah.
sometimes it's that.
So the biggest financial mistake buyers make before closing.
Yeah.
There's actually one that was an interesting story. This goes back so many years ago, but it was funny, not funny. But there was, I had a client who was on the cusp of buying a place. He had his pre-approval was there, pulled credit, did everything. Talked to him about the fact don't do anything, don't get any extra cards or anything. Don't do anything. Just keep doing what you're doing because we've got a pre-approval. And he was literally on the border of this pre-approval. Like his credit was just on that edge. So anyways, we start, and I'm like, yeah, you can go shopping. And I don't say that. Anybody that works with me knows I don't say that lightly. I'm like, go shopping and let's see what we can do and let's find you a place. So he found a place, and but the thing is it took him a couple months to find the place. So we have to pull new credit and do everything else. So he goes out with his realtor, finds a place, writes an offer, and I'm like, amazing. Okay, let's do this thing. My credit pull was fine because it was a couple weeks earlier because he was asking, I knew I'd need to pull a new one for him to go shopping and make sure that it stayed where it was. Then the lender phones me and says, Don, their credit score just took a dive.
Oh no.
And I'm like, what do you mean it took a dive? How can it take a dive from the time that I
Yeah.
pulled it and you're pulling it? How can that happen? He had went out to a furniture store and did
my
the zero
gosh.
down, zero payment option, which is a high risk financing
Right.
company. And when you go to a high risk, what a lot of people don't realize is credit inquiries are not created equally. If you go to the bank for a loan or a line of credit, they might take, and this is a give or take, huge give or take number, they might take, say, 7 points off, give or take, because you're applying for a loan or a line of credit. When you go to a credit card company, it's a higher risk, higher interest credit facility, so it could be like 20 some odd points, give or take. So it can hugely affect your credit. And if your credit is already not great or
You're right on the
borderline,
line.
it could actually take it down even more. So anyways, that's exactly what he did.
Yeah.
And knocked himself out of the race. And I asked him, I'm like, okay, what did you do?
Yeah.
Like, what is it? Like, what did you do that would have, what did you apply for that would have gotten your credit to where it is? And he goes, well, I'm buying a new place. I had to get furniture.
Oh no.
So before anything, before even getting close to subject removal, rubber had just hit the road with his offer and the doors came off.
Yeah. So
I have a question about that for you.
Yeah.
So there's 3 main parts to purchasing a house. Well, there's more, but there's accepted offer, subject removal, and closing day. So out of those 3 days, at accepted offer, there's a pre-approval, and you've approved a pre-approval.
Yep.
Before subject removal, is that mortgage final? Or what if they were to take out some sort of credit card between subject removal and completion day?
Yeah.
Don't do it. Don't do anything. Like, don't go buy vehicles. Don't rack credit cards up. Don't go apply for other things.
Until the keys are in your hands.
That's right. And we actually reiterate that throughout the process. And especially on the subject removal, we send a subject removal email as well. And that says too, it says, don't do anything. Like,
Because it could jeopardize your closing.
Don't quit your job. Don't buy a vehicle. Don't do anything that's going to jeopardize what you're doing